Hello, everyone. It usually takes just a moment as people come over from the waiting room into Now Next Later, but thank you for joining us Monday, January 6th. Today on Now Next Later, we've got Marc Trachtenberg, the chairman and CEO of Silk Title. So for those of you that join us every week, you know we talk holistically about all different parts of the industry. And today we wanted to focus a little bit more on lenders, specifically digital lenders and their title partners. And we'll take a look at the outlook for title and title insurance, the product, and as a partnership for lenders in 2025. So Marc, thanks for joining us.
Thanks for having me, Jeremy. Great to see you.
Yeah, right on. Looks like we've got everybody here. Sasha will probably be jumping in, I'm sure, but we've got some questions ready to go. So as you know, on Now Next Later, we like to do those segments. And for now, what I figured we would start with is just maybe a sentence or two of your background, how you came to, Silk Title, how long you've been with Silk Title, and what the prime focus, like the main focus is for Silk Title, and then we'll jump into some of the innovation stuff.
Yes, I've been with Silk now for close to 10 years. And I spent 10 years prior to that in mortgage lending and realized how archaic the closing and settlement process was, and realized that there was a big need for some change. And I felt that, title was a commodity. I felt that things were going to end up changing, that the way title insurance is being done today is still pretty archaic. And there definitely needs to be some change in how it's done, how to drive the cost down. And, I flipped Silk into being more of a technology, AI, robotics company. That commodity happened to be title, right? Because I realized if you want to change the manufacturing process, you got to change how you widgetize the process and how you make it so that there is transparency, there is speed, and you can lower the cost by not always applying bodies to everything. The old school mentality was just throw a body at it and train them up and make it work. And my feeling was if you're going to try and drive the cost down, you can't just continue to throw human capital at it. So that's kind of what revolutionized. And then we made a lot of decisions to really say, what is our client? Where do we want to go? We weren't going to be the title company for everybody. In order to make that process work, we had to heavily focus on who does our client look like and what do we want to do with it. And those are always tough decisions, especially as an entrepreneur, which is at the end of the day, fear of missing out is always in your mind of, oh my God, I need the revenue, especially when you're first starting out. You're like, all revenue is good revenue. And I realize it's not all great revenue, especially depending on what your model is. Some revenue is great revenue, but it's not necessarily your model. So therefore, even if it is great revenue, it doesn't mean it's great revenue for your company.
Yeah, that's a tough call because anybody who's been in that growing a business phase, and I think you could probably even lump in, forget startups, you can even lump in the cyclicality of our business. Our business is cyclical. So to turn down a partnership or to turn down revenue takes a lot of discipline. So can you talk a little bit about who you would say, and we'll get to next in a second, but now, can you talk a little bit about who is that lender? Who is that partner that you like to say, here are the attributes. Here's a couple of the attributes of our ideal partner.
For us, it's really consumer direct, somebody who's more digital than anything else. Because at the end of the day, they have a bigger mousetrap for us, and that makes it where they want certain things, right? They want to have a streamlined process. They want to have the information at their fingertips. It's relationship building, but it's not like the retail loan officer relationship building. You're looking at it more of a true business operation, and how do you make that business operation so that multiple individuals can rinse, wash, repeat on the same type of thing. So it's not taking away the relationship from it, but it's taking the as much human element as it would be for a more regionalized title company, right? Like for us, it's much more of a business process driven by the technology and everything.
Hey, Sasha, thanks for joining us. It's so good to see you.
Sorry for my delay. Manic Monday.
No. It's all good. Yeah, right. Exactly. I think that's the fun part of the show. So no worries at all. Yeah, Marc, we were just talking with Marc about, specifically digital lenders and consumer direct, and in that channel in particular. We're still in the now phase. And Marc, you mentioned the robotics and the process automation. One of the things that strikes me about this industry is it still has a lot of the DNA of a linear process from back when it was hand the loan data, hand the loan file off, only bring in your title partner when you get to a certain milestone. And one of the things I wanted to ask you about is how you've rethought, or how you are rethinking the timing and the data you need when you lock in with a digital lender. Can you talk a little bit about the business process mindset you mentioned at Silk, and how lenders should be thinking about that going forward for both timing and data that you need to really optimize this partnership?
Yeah, I think the ironic piece of it is everybody focused when that instant title product started coming out. Everyone was so heavily focused on instant title and the necessity to get that data quick. And they weren't wrong, but they weren't 100% right. Like at the end of the day, you need that data. We all knew we were going to get it, whether it be from our underwriter or from another source. And it's important. But at the end of the day, even if I got it to a lender in an hour, they are not doing anything with it for almost 10 days, right? Yes, there's certain facets that are important, like your taxes, certain judgments or liens or anything like those things, property profile report you can get right away. Like, and that's very valid information. And then when you streamline that journey from, going from PDFs to system integration, that streamlines things even further, right? Like, so one of the things Silk originally started working on was get rid of PDFs when not needed, right? We still deliver the PDF in case an investor wants it, but stare and compare made it is a huge time suck, right? Like at the end of the day, if every single file a processor has to open or an underwriter has to open and read the title, that is very time consuming. And when we said, let's get rid of that and let's make it system to system, and then let's highlight where you need to look and what areas are important so that you can underwrite that file and get to the clear to close, that sped up the process a lot. With that being said, though, we didn't hyper focus on that side of it because we knew we were going to get that information in the data information. We spent a majority of our time on the back end for the consumer experience, and I drove everything to the experience, right? Like, so if you did this on the front end, and we ended up doing that, well, that speeds up all the way through the title curative piece of it. We also put a lot of our heavy hitters, meaning our higher quality employee, in the curative phase, because that's the risk side of it for us, right? And we said, okay, let's not dehumanize that piece of it. Let's make sure we have experts in that side of it to de-risk it. Then we said, okay, once we got that side of it, and then we went into the reporting side of it, and we knew how to manage that from an oversight standpoint. We then said, okay, well, what do we need to do in the back end, and why is there so much rub? Because there is a big rub from closing to post-closing to funding and trailing docs, right? And we realized, hey, let's put the robotics and AI into that piece of it and take those human beings and focus them more on client services and QC, right? So right now, for example, we have what we have considered instant CD, but we call it rapid CD because we still let the human being do a QC mechanism behind it. And that has sped up the turn times from a CD being produced from our side back to the lender. And what's important about that was it wasn't just about that one turn time about the CD, it was volume based, right? So the way our system's set up now is, if I get 1,000 CDs in an hour, I don't need 1,000,000 people to do those 1,000 CDs. The robotics is actually doing it, which means I can scale a lot faster, right? And then that created a lot more customer service, because at the end of the day, we're looking at it and saying, okay, let's QC this, and then out the door and working with the lender to get it to closing and at the table, right? And that really created a customer service experience. And then when we started putting some of that stuff in the post-closing piece of it, that sped up our ability to be able to fund on time and get that piece of it taken care of. And then same thing on the funding side of it. We increased that, especially now in this era with more of the cash out and debt consolidation. Every borrower who's doing a refi right now, overall, it's not as much rate term. So what are they needing? They need their money yesterday because they haven't paid their bills. Right. So that when we were able to speed that up, and between all the way from front end to back end, that really paid off. And it was a bet, right? Like, I didn't expect the market to do what it did, but that bet paid off, because when the market did what it did, speed was the number one piece of this. It actually wasn't the cost. We happened to drive the cost down because of all of it, but speed became even more. Speed, quality, and cost were really the three layers that we focused on.
Yeah, Sasha, one of the things that Marc mentioned that seems to keep coming up for us on Now Next Later is you've got to be able to move as much information up front, but as a result, you don't necessarily need to automate everything. And Mark, I think that's an interesting point because we hear a lot of bluster. Some people call it puffery
Yeah.
around like we've automated everything. But what you just said is don't necessarily go there first. Automate the decision tree and then get the people working on the hardest stuff. How do you look at that then with like what you take on next? As you start adding robotics in there, like how are you choosing once you're set up this way? How do you expand? How do you get more lenders? How do you get more volume? How do you move from digital cash out refi into other things? How are you approaching those decisions for people who are in the
Yeah,
same
when
boat?
we first started looking at the robotics and the AI and everything else, we said, okay, we want to take the least risky part and master that. Because what I can tell you, when we first got into it, it cost me a ton of money and it cost me a ton of time to make a ton of mistakes. Right. And then when you get good at how to perform on that, then you can say, okay, hey, how do I put that over here? For example, we said, okay, once we figured out the CD side of it, trailing docs and policy. How do we automate that so we don't even have to think so that the lender gets what they need right away? Because a lot of title companies stop at close the loan and fund it, right? It's also, you got to look at what's the most important piece of what a title company does. It's issue policy and make sure the lender's covered for what the transaction was for. So I think, when we started looking at it, we said, okay, what's the easiest things? Then we said, okay, now what can we push the envelope on? And what would that do? I'm in a big spot of an if then scenario. If we do this, then
Okay.
what happens? Right. And that to me was my mathematical logic, which was, and if you look at the mortgage process, it's all mathematical logic, right? And you say, okay, if I do this, then what happens? And I think when we started realizing that, and quite frankly, we tested some things, we screwed some things up. We had great original clients that were allowing us to do this because they want to innovate. So we had great partnerships that said, okay, let's test this out and see what happens. And everyone was transparent with clients and anyone else in the transaction say, hey, are you okay with it? And that allowed us to beta some things. And as we learned, okay, this is how we can do it and how we can do it better. How can we do it cheaper? How can we do it faster? It wasn't rocket science. It just took a lot of patience and tenacity to understand it.
Mark, I'm curious in that feedback, was there anything specific or interesting that was either tried to automate it and it didn't work, or things that you didn't immediately automate that were a no-brainer, and so then you picked them up as a kind of second to your MVP, so to speak?
Payoffs was interesting. When we were trying to figure out how to do payoffs, we automated the chases, the B of A's, and everything that you didn't need to speak to a human being. But then you started getting into, okay, we mastered that. Now all of a sudden you start getting into some more regional banks or a Mr. Cooper who doesn't want to give anybody a payoff. Right. So you start looking at certain things and saying, okay, now can you figure that out? Or is that parceled out into, the lenders that, hey, you're going to still have to do more manually. Right. And then you start looking at it going, okay, if we could do this on a CD, what else could we do it on? Post closing was very interesting to me because of the idiosyncrasies of what post closing really meant. Right. And understanding
Have
how
you figured that out yet? Because we're still trying to figure it out.
we did, which I could tell you took me 2.5 years to figure out how to automate post closing. And it was challenging because you had a lot of how do you read the document? How do you read the signature? How do you validate the signature? How do you do this? How do you do that? How do you train? Like everybody looks at it and goes, okay, well, I talk about AI or I talk about robotics. What no one wants to talk about is you spend so much time training a human being. Take that amount of time you take to train a human being and multiply it by 10, right? And training a system is actually harder than training an employee. Once you do it, though, you get a lot of benefits from it. But it's very taxing and time consuming, and there's a lot of hours that go into it that you have to be willing to put in, and you have to be willing to put the money into it. Like it's not a cheap solution. But Sasha, to that point, it's you gotta be willing to take the risk, but you also have to have great partners. Because if you don't have great partners, then it looks like, okay, you screwed it up. Where we realized if you just go out at first and say, hey, would you like to do this with us? The answer is yes. Okay, here's the pitfalls of what could happen, and here's some things. So it wasn't, we made mistakes along the way, but thank God we had good people alongside of us to share in the pain. And some of it too is when we made a mistake with a borrower, ended up doing a free loan for them. I got title insurance, but I didn't charge anything else. I got the title insurance and I got the recording fees and everything. but I didn't necessarily charge them anything else. And that was the thing. We let the borrower know, and hey, if something was a mistake, we honored that mistake, and we made good on it, right? And that's tough. You got to have a little bit of a war chest in order to be able to do that.
Yeah, absolutely. Love the
Yeah,
integrity there.
yeah. Can you talk a little bit more? We have a lot of people who listen to Now Next Later, watch Now Next Later, and want to do some of those more trial and error or initial type partnerships that you just described. When you first went to your kind of top uh, clients, your partners, the digital savvy lender who you said like gets it and wants to try it with either a subset of, is there anything, I know there's no like magic here, but can you talk a little bit about how you approach that and what advice you'd give to others? Because I think there's a lot of hesitation going, hey, to go to a partner and risk or feeling like you might risk the relationship by asking them to do something new, even if you're willing to backstop it with the free loan in the event of an error. Can you just talk about how you approach that the first time and what advice do you give to others?
It's really about the approach was simply, are you interested in this? The answer was yes, explaining what's about to happen, right? Not just saying, hey, if you look at LinkedIn right now, Jeremy, I call them the LinkedIn champions. Everyone talks about the same stuff, right? And for me, it was like, what are we talking about? Like, we're going to talk about AI, and we're going to talk about robotics, and we're going to talk about how to do this stuff. You really got to have an open conversation, which is, are you interested? The answer is yes. Like, those are the key words and everything else. Okay, now I'm going to lay out to you, this is what could happen. This is your happy path. Could it be happy all the time? Yes. But then there's this thing that's going to be, especially on the onset, and not going to be so happy throughout it. Are you willing to understand that? And then betaing it with the right loan officer, right ops team, right? You don't want to beta it with the whole company. You want to beta it with people that will understand this, and you get them into a conversation and you explain it so that there's not everyone's going, oh, that sucked, right? And you look at it and you say, okay, like if everybody's on the same understanding, well, everybody then sets it up properly that you're not hoping for something to happen, but when something does, it's not people that are on pins and needles and fighting each other, right? You're actually then coming back to it and saying, how do we solve this together, and how do we solve it together in a short period of time so we don't make that same mistake again or that same issue come back up. It's a hard conversation because most people don't. When things are going okay, especially in the markets we're in today, no one wants to disrupt anything, right? Like you look at it and say, okay, well, the most important thing to a lender right now is just getting the revenue and the business in the door. So do you really want to have that conversation? And, I think one of the things that's coming about is the lenders that are still standing realize that this is where it's going. So it's not an option at this point. You really got to say, where and how do I fit it into my ecosystem?
That's the kicker with technology adoption, and Jeremy and I are all too familiar with it, which is although people do want the happy path, edge cases are where rubber meets the road, and they are ever present. And if you don't call it out and you don't look for them and work through them up front, you'll never get adoption. Not through your partner, not through your customer, not through the borrower, like whoever the users are.
Sasha, you're so spot on. And I learned it actually not doing it on title. So I own a bunch of other companies, and we actually started cutting our teeth in robotics and medical billing. Right. And I think I got the upper hand on it because I understood on that side of it. And medical billing was actually easier than title and the idiosyncrasies sitting in title and mortgage. Right. But I think that's where I realized tech is a CSV file. I always looked at things of tech is only built unless you build it the right way. And if you understood Excel and CSV and you understand the if then you truly understand, hey, how to get in front of the if then, beta it out in your own test environment. When you go live, it's never going to be the same as sitting in your test environment, and you haven't thought about everything and being upfront with people of, hey, there will be some things that do occur. Then you have it's a partnership. It's not just you being a vendor or a tech company.
Yeah.
So one of the things we wanted to do, Marc, was also make sure we talked a little bit about what's next in the industry. And you get a lot of questions, I know, on title and title alternatives, given the focus on cost, the focus on experience, and the fact that the GSEs have focused on title and title alternatives in 2024. So I guess give us where do we sit today in your mind with what lenders should be thinking about when they evaluate products or their title partners? And then where do you think it goes this year in 2025? Two questions.
I think everybody's got to really understand what alternatives mean and what does it mean from a risk standpoint. standpoint, right? And really understanding where you are as a mortgage company and a title company as to where your appetite for risk is, and then also appetite for what happens if the risk becomes reality. And I call it risk to reality, right? Because it's all risk on paper and all risk on thought until reality hits. And when reality hits, it's called money, right? Risk to reality to money. And what does that really look like? And as I saw some of these alternatives come out, they're not wrong to have an alternative. What they're wrong about was to say it was replacing title insurance in its entirety, right? There will be times where it does make sense to have an alternative, but there will not be times to say, okay, from a risk level, it makes sense to get rid of it. Our druthers was to drive it all the way down to say, okay, what's the least amount of money we could charge and still have the right experience, service levels, and everything else, right? So I think that those are things that you got to look at, and you got to collaborate on that. I think one of the things that comes out of this with this alternative is everyone wants to talk about the alternative because their real initiative is to drive the price point down, as opposed to saying, what am I getting and what is the risk and what is the repercussion potentially of that risk, and then realizing, okay, are we just driving the price point down, or are we really trying to look at everything else? And I think where we're headed with it, Jeremy, and where I know I'm headed with some of this, is really looking at it from an evaluation standpoint. Just like you underwrite a file, the one thing that's missing in title insurance is it's the only insurance that's really not risk-based. It makes no sense to me. It's one of the only insurances that you say, okay, you go to health insurance, it's either age-banded or it's risk-based, or it's that car insurance, home insurance, it's all risk-based. Title happens to not. I mean, now we'll tell you at times it is because, okay, you can get centralized rates based on the volume you do, so it lowers the risk pool and everything else. But it's truly not risk-based based off of the borrower. And if you're looking at the alternative, I think you got to start looking at where does the risk lie? Risk lies in the collateral and the borrower, right? What's the borrower's ability? Because where do the claims come from the title insurance side of it, Jeremy? When the borrower stops paying, it goes into foreclosure. Right? When the borrower's paying what they should pay, it doesn't, you don't have that. So the reality of it to me is you got to look at collateral and borrower's behavior and understand what does that look like and what's the overall risk, and can you lower the cost of that based on that? And I think when the industry gets to that, then you'll truly be able to talk about alternatives. That was a lot.
It sounds like there's two key points there, right? I mean, one, well, big picture, I guess. You and I talk about this a lot, but the fact that title is really paying for the work of how hard or obscure the data is, right? So you're really saying, like, how hard is it to know a thing? And then you pay for this policy because historically, at least, it's been really hard to find or know.
You just hit, and I'll say this in front of everybody. Silk's secret sauce isn't robotics AI. Silk's secret sauce is data, right? Data and what we do with it is really what changes the game. Right. And understanding that, and I happen to own a data company, so that's part of this whole thing. So the reality of it is what happened, right? And how do you get there? And risk is based off of that, and how you analyze that data, and how your tech analyzes that data. And then once the tech analyzes the data, what do the people do with it? Right. And that's really where it boils down to. And how do you lower the cost? It's all based off of how do you lower the risk, and how do you lower the risk? You get more information based on the data that you're able to have. That's really where the industry needs to go.
Yeah. So if I'm a title, oh, go ahead, Sasha. Yeah.
No, you're fine, Jared. Is tactically lowering the cost as an outcome. It's not a strategy.
100%. If you go into such, you hit the nail on the head. We never went into going, we're going to lower the cost, because if you just lower the cost, well, you're not going to be able to fulfill things in a manner that it should be fulfilled, right? You got to go after. We went after the experience. That experience drove us to what we needed to do, and ironically, we landed on lowering the cost by doing that. Like, the experience was the most important piece to us, and the consumer being happy, the borrower being happy, the LO being happy, the real estate agent being happy, like that experience to happiness was really important. And then you figure out how to drive to get to there. And that ended up creating the efficiencies and lowering the cost. And then when you look at the data and you say, okay, now I can make good decisions based off of certain things. Now all of a sudden it does speed everything up and it does cost less, but you are spot on.
I was just, Jared, that's something we hear holistic or thematically, is that we got to be more holistic, more strategic in how we're solving all the problems in the industry, not just tactically looking at the outcomes that we want.
One thing
That's
too,
right.
I
And
mean,
I
one of
think,
my competitors, I mean, they're no longer in business and they're all over LinkedIn right now for not being in business. I mean, they bragged about having 1,000 data scientists. They raised $500 million. I laughed and I said, well, what do you need with 499 million of it? Right? Like it's title, right? Like at some point in time, you got to look at this and say, how do you drive these things without really doing what has been customary?
yeah, and I think that's the key point that the Now Next Later audience is going to be interested in, which is to say, you have to actually do the data verification, data gathering, data automation that we're talking about to lower the cost of operational production in order to discover where the risk is to create a new product, new alternative, or new underscore whatever that comes out of this whole analysis of, can we actually lower the cost of this product? Can we lower the cost of home ownership? I mean, I think a lot of us who spent years trying to come up with ways to lower the cost of home ownership have now really said, how do we just hold it steady? How do we just not have it increase more rather than actually considering lowering it? But I think the outcome for me of this conversation is, when you do the right things around data, automation, verification, analysis, then you will potentially uncover cost that you can pass on in a risk-based or alternative model, but you're not going to get there unless you source the data differently, the supply chain differently.
It's sourcing it, it's parsing it, it's analyzing it, right? So you got to source it, parse it, analyze, right? And when you do those things, you can have a better outcome, right? And Sasha, you said it earlier, it's about the outcome, right? And the outcome creates the experience. One of the things everybody's talking about right now is where, I call them, again, the LinkedIn champions. Everyone wants to talk about the 10-year bond. I don't control the 10-year bond, right? Until the GSEs get out of conservatorship, no one's controlling anything at this point in time. Right. And I don't think everyone's prepared for the rates to go up. Everyone wants to talk about rates going down. There's a very good likelihood in 2025 rates go skyrocketing before they go down. Right. And you got to look at what that means. And it doesn't mean activity stops. Right. It means certain activity may be limited, but activity is not going to stop. America's in a ridiculous debt load situation right now. There's a ridiculous amount of equity sitting in these situations, right? So, people have to move. People have divorces. People have a property to sell, a property to buy, right? One thing you got to stop is the fear mongering going on. What happens if rates reach 10, which they may this year? They may. If Trump has his way, Fannie and Freddie are out of the government control and into out of conservatorship, and you are going to see some interesting things happen, right? Do we know that? No, but it's like the weather, man. Somebody asked me about the rates. I said it could go anywhere from 6 to 10%. I'm not going to be wrong.
I wonder. Yeah, it's one of those really good kind of, we used to call them, when I was at Rocket Mortgage, we used to call them spark questions, like a really good spark for your strategy people or your risk management people, if you're listening at a lender right now, would be like, what happens if rates go to 10? What do you
Scenario
do?
planning.
What happens if, yeah, because I think we talk a lot about these like reasonableness bands. Oh, it's going to be between 5.5 and 7.5, or what if this happens? What if this happens? I don't think we as much spend some time going outside of that and say, well, what if it goes all the way to this? What if it
But
goes
don't you
just
think
enough
that
to have
happened
the
back in
plan?
2022? We all said, oh, rates would
Yeah.
go to 4.5 and we'd all be good and our pipeline would dry up by 50%. Well, if anyone's real with themselves, everyone's pipeline dried up by 90%, right? It wasn't 50%, it was 90%. Right. And then that lasted for about 9 months. And then it started turning again. Right. Like, listen, my pipeline dried up 90%. And I'm one of the most successful title companies in America. Right. But I'm going to be real.
Yep.
And what did we have to do? We had to retool and refocus on market share, not the stuff I can't control. Like, I don't care about 10-year bond. Like, at the end of the day, I don't call Joe Biden and say, what's it going to be tomorrow? Like, how do we get it down? Like, you literally say it is what it is. And you got to go after and figure out how you drive business to be successful.
So there's a question here in the chat. I know we're running out of time, but it's actually ancillary to something I wanted to ask. So I was going to ask you if you've started to see the data work for you in predictive analytics manner. Jay's asking about blockchain and the potential of use of that as a solution to help enable in the title space. So feel free to take either or. And meanwhile, apparently you are now the chief Spark officer, according to Michael Keller. So
I do. I mean, some of the things is that, the data that I have leads into a lead generation source too, because at the end of the day, it's predictable. You can see certain people's attributes, and you know when somebody's needing to refi, you know when they're about to do a purchase. You can see the day. I think blockchain's 25 years away from the title side of it. I don't think it's anywhere near where it's going to need to be because of the risk base behind it. Do I think it gets there? I do. I think I'll be dead or have sold my company by that time. By the time it gets there,
let's go for a sell of company, please. Okay, no morbidity on this call.
It is what it is, Sasha. I mean, at the end of the day, it's reality. I think a lot of people try and use keywords to think and get ahead of their competitors, but what does it really mean? Like, and what is blockchain, right? Like Mike Agnew talks about it all the time, a figure. Right. I know the inner workings of Figure more so than probably anybody else does, and we don't even do business with them. Right. It's not true blockchain. It's not true blockchain. It's called data that you analyze and you create a risk off of it. Right. Blockchain is just a sexy word, but it's not reality right now. Like there's too many unknowns for it to be true reality right now. It's the reality of it is take the data, understand how to analyze it, have algorithms and tech that help you analyze it, and then have the human being validate what that is, and then say, okay, we're good, right? We're not here yet to say, okay, we can do X, Y, Z. Now, I took certain things that, okay, for example, I built technology around statute of limitations. Well, could that be blockchain? Well, yeah, I guess you could say, well, my tech automatically takes off a lien that's no longer valid, right? If it shows up on title, we know we have a technology piece that takes it away. Right. Those are things that stop working on the bigger picture all the time and focus on how to get to the bigger picture and focus on it's like winning a war. Right. You don't go out there and win the war day one. You got to win the battle. Right. And I look at my life of how do I win battles every day to get to winning the war and be successful, where everybody else wants to look at, let me talk about this and try and reverse engineer it. Like I'm not trying to reverse engineer anything. I'm looking at it going, what do I need to do to get there? And what are the things that I need to do daily consistently to solve for that problem and see if it's working?
What I'll do, as we're probably trying to close out here, Jer, is I'll turn Marc's real inevitable morbidity comment into a positive, because that's what I do, which is tomorrow is never promised. And what I hear you saying is look for where you can have the most impact, focus your time there, one step at a time. And I think that's a great way for us to wrap up the call, Jer.
Agreed.
Yeah. Thank you so much for being here, Marc. And great point, Sasha. We will end on, the aspects of now, next, later that you just said are you got to do the now to get to anything else. So if you really want to get to later, you got to take these steps and do the next best thing. So appreciate it, Marc. Great insights. Really strong now, next, later, and we'll definitely have you back at some point in the future, talk more title.
Sounds good, guys. Thank you so much.
All right, man. Take care. Thanks, Sasha. Thank you, everyone, for watching. See you again next week.
Bye.